Hello again from me, Kevin French at Core Wealth. We're going to be having a look at what happened in the financial markets around the world in May 2025. So the big news around the world continues to remain tariffs, but what happened in the US was that a trade court declared that the tariffs imposed on Liberation Day were actually illegal. The White House is going to appeal this ruling, and in the meantime, until that appeal has been heard and settled, the tariffs will remain in place. This affects a number of countries around the world. For our South African investors, the tariffs that were imposed on South African manufactured vehicles as well as aluminium and steel will also still remain in place. So Moody's, one of the larger ratings agencies globally, has downgraded the US credit rating by one notch. This brings it in line with the other ratings agencies globally. In addition to that, we have also seen that the expectations around inflation are remaining relatively high, and we've seen the market now suggesting that they don't expect as many interest rate cuts over the rest of this year as they had previously because inflation is a bit sticky. Donald Trump's big, beautiful bill is a tax cut and spending bill designed to hopefully stimulate the US economy, and therefore meaning that the government will actually earn more in taxes. So if this bill does not stimulate economic activity and therefore tax revenue collections, it would be bad for the US. So in South Africa, our Reserve Bank reduced interest rates by 0.25%. And in addition to this, the Reserve Bank governor also started preparing the market by suggesting that they want to reduce their inflation target from a range of 3 to 6% to an actual 3%. And if that would happen, that would be better for our currency and also for the average citizen over the longer term. In May, the South African currency also improved over that month. You'll see when we show you the numbers a little bit later. And this was just on the back of a number of things starting to improve. The Government of National Unity finally passed its budget. And in addition, the visit to the White House was actually on the whole probably a positive move in terms of South African relations with the US. Global markets have been quite volatile so far year to date. If we have a look at this slide, we can see that for the month of May, a lot of green and some quite big numbers coming through after a quite scary April, as it were, after the Liberation Day tariffs and all the turmoil that brought. But we can see on here, particularly Europe and the UK, very strong so far year to date and really catching up ground against the US after a very strong 2024 by the US markets. And so if we have a look over the longer terms now, 3, 5 and 10 years, we can see US equities still having been very strong, but developed market equities almost in double-digit figures over all periods now. Some quite healthy returns over the last 5 years in particular. So South Africa's financial markets also were positive during the month, and you can see from here, equity markets, the best place to have been, 3.1% up. And then the Rand, as we mentioned earlier, strengthening against all three major currencies, the dollar, the pound, and the euro. If we have a look over longer periods, the last year has been really strong. Listed equity in South Africa up over 27%, listed property up over 32%, even our bond market at almost 22% for the last year. But again, then starting to look at the longer term, 3 and 5 years, some really attractive returns coming through from our markets in South Africa, particularly equities and listed property, but even the bond market at 10.1% over the last 5 years. With inflation at 5%, that's over 5% real return from the bond market, which is very attractive. So having a look at our global models here, we are looking at the US dollar models, which have now got an 8.5-year track record. And over the last year, you can see some significant outperformance of the peer groups by all of the models. If you were in the global balance strategy, 12.2% in US dollars over the last year is very attractive. And these diversified portfolios with an underweight at the moment to US equities have performed really well. But over the longer term since inception, you can see still some healthy outperformance of the peer groups. So these are our global strategies for investors who are investing in UK pounds or UK sterling. And we can see over the last year, the models have actually struggled a bit, although defensive and growth are only slightly behind their peer groups. But over the longer term, which is now 3.5 years, all of them managing to outperform. We've made some changes to these strategies, particularly the balance model, and are looking to make a manager change within there because one of the managers has not been performing as well as we'd have hoped through this period. So here are our South African models for our Rand investors, and you can see over here a lot of green on the strategy showing some really good outperformance, and also the magnitude of that outperformance quite significant, especially over the 5-year periods. Just having a look at some of our more multi-asset or balance type strategies, our Core Wealth Balanced and Core Wealth Retirement Growth, all of them around 15% return. If you think that inflation over that period was at 5, you're getting a 10% real return, which is double what you'd expect realistically from those strategies normally. Economic growth and what happens to interest rates are two things that are usually of interest to most people. We're going to have a look at the different factors that influence those two things and break it down in a little bit more detail. So starting with inflation, oil is one of the major influences of our inflation rate because most things have to be transported and therefore the oil price influences the fuel price. So this graph just has a look back, and you can see that back in 2008 the oil price went up over $120 a barrel, peaked in 2022 again with all the crises, geopolitical things that were happening in 2022, but has been coming down quite steadily, coming down to close to $60 a barrel. Last night, Israel attacked Iran, and the uncertainty of what that could do to oil supply saw the oil price spike by 5% today. An oil price of around $60 a barrel is quite attractive from an inflation point of view in South Africa. This spike that we saw yesterday could be a short-term thing just until we see how the tensions between those nations are handled, but we'll have to wait and see as to what that does to the oil price longer term. This graph just shows how the South African currency has moved relative to other currencies around the world, and we can see having strengthened by 6% so far year to date, and this was up to the 9th of June, was pretty much in line with most other emerging market currencies. But to give you an idea, on the 9th of June, the Rand was trading at 17.74 to the US dollar. In April, at one stage, it was almost $2 worse at 19.75 at one point during the trade tensions with the US. So we've seen some good strengthening happening since then. If we have a look at our bond market, which is what foreign investors could be attracted to, we can see in this slide that the South African bond market is the second most attractive, only behind Brazil, in the world at the moment. Our yields on our bonds, if we subtract inflation, that's the purple line, are trading at really attractive yields. And this could be further impetus for the Rand to strengthen as foreign investors put money into our bond market. One of the main things that is on the mind of our Reserve Bank officials when they decide on what to do with interest rates is what's happening with inflation. And this slide just shows you that inflation has been coming down. The green highlighted area is just showing whether the band that the Reserve Bank is targeting between 3 and 6%. And that has actually come down now to below 3% at the last count. And that was one of the reasons why there was a 0.25% cut. One of the members of the committee actually voted for a 0.5% cut, but it was set at 0.25. So South Africa's GDP, or its economic growth, is not high enough. We are not growing fast enough. This slide just shows the latest figures, which basically in the first quarter of 2025, the South African economy only grew at 0.1%. Quarter on quarter. The fourth quarter of last year, we only grew at 0.4%. So there's not enough economic growth in South Africa, and this is one of the things that the government needs to really find ways of stimulating our economic growth. And the Reserve Bank could potentially help this somewhat, but it's not entirely up to them, by keeping interest rates lower so less interest is paid by businesses and individuals. So this slide just shows how we've seen a structural decline in economic growth in South Africa over the last number of years. At the moment, with economic growth just above 1%, is really not enough growth as to what South Africa needs, particularly to create jobs. The three main things that the Reserve Bank needs to support lower interest rates, which should help economic growth, are oil prices to stay low, although that's not something we necessarily have full control over. We need a stronger rand, and we need lower inflation, and lower inflation, in fact, will also create a stronger rand. But a stronger rand will probably, the biggest thing the government could do is to create policies that attract investment, something that we haven't seen much of in the last number of years. So this graph just shows you the GDP or economic growth that we've seen from 2010 up until 2024, and then forecasts for the next 3 years. And we can see there at the moment those forecasts only getting up to 1.8%. South Africa has got a lot more economic growth in it than it's currently delivering, but it needs some structural changes. It needs to be attracting investment both from overseas and from local companies. At the moment, there's far too many local companies who are sitting on a lot of cash but are not investing those because of uncertainty. So as soon as there is more certainty around how South Africa is being run, we should see those cash piles being deployed, which will help economic growth. Thanks for watching. We hope that you found that informative, and especially if you're planning some things around your business into the future, that some of these insights might be of help. If you have any specific topics you'd like us to cover, please leave them in the comments below. We'd love to share our insights with you on anything that may be of more interest.